Okay, that's better. So today we are going to talk more about SUTA. We'll take a look at the Iowa SUTA form that is issued by Iowa Workforce Development. We're going to go through a problem as well on the reserve ratio. If you've read ahead at all in the textbook, this is probably the topic that I get the most questions on, aside from the FUTA credit. But this is a topic that I get a lot of questions on from students about figuring out this reserve ratio. So we're going to go through one of the problems in the homework about the reserve ratio. We'll also take a look at the Form 940, which is the form that is used to report unemployment taxes to the IRS. It's an annual reporting form. And we'll talk about the schedule for that as well as the deposit schedule. I'm hopeful that we'll get through all of that today. And if we do, that means that it opens up for Tuesday, the whole period, to really just answer questions that you have. Go through homework problems that you can bring to me and kind of have it as a work day next Tuesday. So any questions before we get started? All right. So let's take a look at the Iowa form. Oops, I did this. Let me delete this so I can do it again. Did this in the last class period. All right. Actually, let's first go to the Iowa Workforce Development website. So this is the state agency that administers the state unemployment program in Iowa. They do a lot of other things as well. They do a lot of training programs, retraining programs for individuals who maybe have been laid off from their jobs or lost their jobs and are needing to enter a different field. They offer a lot of different services, but one of the things that they do for that we're interested in is they administer the state unemployment tax program. And when you're an employer, a new employer in Iowa, there are certain things you have to do. So we've already talked about getting an employer ID number at the federal level, so you need that. But a couple other things that you need to do if you're going to sell products, you need to have a sales tax ID number. So you have to register with the state to obtain a sales tax ID number. If you're going to have employees, you also have to register with Iowa Workforce Development to get an Iowa Workforce Development account. All of the reports the report that we're going to look at here is filed probably almost exclusively electronically now. So employers will log into their account and file the form electronically, make the payment electronically for those unemployment taxes that are due. But I just kind of want to show you what the form looks like and how it's set up. So this is, and it's Form 65-5300. So the employer's contribution and payroll report, this is filed on a quarterly basis. So you can see up at the top right, we've got the different quarters. It's due by the last day of the month following the quarter end. So at the same time that those 941 forms would be due, the payroll professional would also be filling out these forms and submitting them by the same due date. All of those are up there at the upper right. So this form is used, you just indicate which quarter you're filing for, what your year is that you're filing in reference to. The form can change from year to year, and it very well may change next year because of some of the, I don't know if any of the changes in the federal law with regard to overtime and tip income, if that will have any effect on any of these. It may or may not, but this form, it's pretty standard. Usually what you do when you're filling this out is you start with page 2. So on page 2, you can see there are spaces for individual employee information. So each employee has a line. This is kind of a scenario we're going to go through what I've got entered up here. So social security number, employee name, total wages paid for the quarter, and taxable wages paid for the quarter. So remember, you're keeping a running tally of all the wages that have been cumulatively paid throughout the year. Once an employee reaches the wage base, which again, and the wage base is not listed on here, so this is why we can use this from year to year. But remember, for Iowa, that wage base for 2024 was $38,200. So that means that our total wages paid very well may not be the same as what our taxable wages paid are, because that taxable wages is going to just include those wages up to that $38,200 amount for at least in 2024. Let's see here. All right. So, and obviously, like this has space for 15 employees. Obviously, there are multiple, many companies out there that have more than 15 employees. Employers can also upload this information into the unemployment system so that they don't have to enter everybody's name individually. But if you only have a few employees, then it's easier to, or it's not difficult to just enter all of this information in manually. So once that is entered, the total down here for all employees, or total for this page, is listed. So our total wages paid, total taxable wages paid, that information gets transferred over to page 1. So the federal FEIN, that's our federal employer ID number. So this would not be like this, if you have a state ID number, it would not be the state ID number. Oh, also, so employers would also get a separate number for state withholding as well. So you would apply with the Department of Revenue for both a state withholding number that is used, as well as a sales tax number if you are selling items that are subject to sales tax, and then an employment tax number. So those 3 separate numbers that would be used. But what they want up here, you would have your unemployment account number up at the top, and then also your federal employer identification number would be entered under here. All the business information with regard to the address up here. The wages, so in this scenario, I've got I'm saying that this is the 4th quarter of 2025, which obviously this wouldn't be filed yet. This would be filed in January, by January 31st, because the 4th quarter of 2025 hasn't ended yet, but we'll just pretend that we're working into the future. So our total wages, which come to 19,000, we'd enter here. Taxable wages, which I think come to 17,200. So in this scenario, we have an employee who has reached that $38,200 during the 4th quarter, and so that's why their taxable wages are less than their total wages. In fact, I'm going to put this up here so it makes it a little bit more clear. So 1, 2, 3, these are employees. And this is our quarter 1, quarter 2, quarter 3, quarter 4. So in this scenario, I had an employee or 3 employees that are paid throughout the year, and they're paid equally throughout the year. So we have a taxable amount, we have a total amount of pay, and then we have taxable. Hopefully you can see that. So $3,000 was how much this employee is paid every quarter, $6,000 for this employee, $10,000 for this quarter. So if we have, for SUTA purposes, remember our tax base for 2024 in Iowa was $38,200. That means their taxable amount for quarter 1, all of it was taxable for all of them. right? If we say they've got a contribution rate of 5%, so this is 19,000 total wages, 19,000 total taxable wages. So that means that on this form, this wouldn't be the 8,200 in the first quarter. It would be the full 10,000 that would have been entered there, times 5%. Our total SUTA tax in this example $950. Now, recall, if we have to do this for FUTA purposes as well to determine how much is owed for FUTA tax, but our base is different. We would have 2 employees that hadn't reached the $7,000 base yet. So FUTA is 7,000. So you'd have to do this separately, once for FUTA and once for SUTA. Okay? So this employee 1 hasn't reached the 7,000, employee 2 hasn't reached the 7,000, employee 3 though reaches the 7,000 in the first quarter because they were paid $10,000. So the taxable amount or the base for FUTA would be different than it is for SUTA for the same quarter. So for SUTA, we'll just do this for SUTA this time though. Quarter 2, if we have the same amount, so total and taxable, we've got 3,000, 6,000, and 10,000. For SUTA purposes, again, all of it is taxable because cumulatively nobody has reached yet the 38,200. So you have to look back at the previous quarter to see what they've earned year to date to determine at what point they reach that maximum amount. So again, 19,000 times 5%, we're still going to owe $950. We actually don't get to a point where any of these employees reach that maximum until the fourth quarter. So let's take a look at that. So we've got, again, quarter 3. Taxable. Because cumulatively, so this employee has cumulatively earned $9,000, obviously, well under the $38,200. So all of it, and even the employee number 3 has only earned $30,000, which again is still under that $38,200. So same amount for the third quarter. So $950. Now we get to the fourth quarter though, and we've got total and taxable. Employee 1, total earnings $3,000 for the fourth quarter. Their cumulative earnings for the year is $12,000, so it's under the $38,200, meaning all of it is taxable. Employee 2, if they earn another $6,000, divide these up. They earn another $6,000, so now they've earned $24,000 for the year cumulative, which is still below $38,200. So all of it is going to be taxable for employee 2. Employee 3, however, because they earned a total of $40,000, not all of their pay in this fourth quarter is going to be subject to SUTA tax because they reached that $38,200. Only $8,200 of it is going to be taxable. So you can see in the fourth quarter, again, total payments $19,000, but here $17,200 is taxable. So that means, again, 5% contribution rate. They're not going to owe $950 in the fourth quarter. They're going to owe $860. So that's what I've got represented here on this particular form. Let me make this bigger for you, though. Is that total. So our total wages paid, this is the fourth quarter. It doesn't carry over here, and I can't, that's not a fillable cell, so I can't indicate on the second page that it's that it's the fourth quarter, but our total wages paid and then our taxable wages paid for each of those employees, then that gets transferred over here. So the total wages for this quarter, $19,000, not for the year, but for this quarter, taxable wages, $17,200. So the total of all these pages, so each of these, you'd sum up each page, but then all of the pages you would add up and enter the information in onto page 1. State experience rate. So we've got this state experience rate. That's the rate, and each of these would already be determined by the state. So if there's a reserve fund rate, and I honestly don't know exactly what that, I guess it's to include more in the reserve, the pooled reserve, which we're going to talk about when we do this reserve ratio calculation. There's some sort of surcharge. Those would be added in. But the state experience owed, so it's telling you take line 2, multiply it by whatever the percentage is over here that's already been determined by the state. So 800, did I get that right? 860? Why does that not seem right? 17,200, 3,917. Okay, I guess it is. So 860. Nothing here. Nothing here. If there was an amount over here, then that would also be added in as a percentage and amount that's owed. Contribution owed, we're adding all those together, so we owe $860. If we were late in paying, which we don't want to be because that's also going to affect our FUTA rate, right? We may lose some of our credit if we do that, but let's just say that we were late. We can calculate, and actually they've got a little calculate function here. Maybe not. I don't know what that's for. It doesn't go do anything. So if we have interest due, let's just say we paid it 5 days late. So how to calculate the interest due, multiply line 6 by the number of days late. All right, so 860, 5 days late, 4,300. Multiply that number by 0.0003333 times $1.43. So we've got $1.43 in interest. What is that annual rate? So that's an annual rate of 12%. And then we also have a penalty. So we pay the greater of either $35, which they take, or the penalty rate times total wages. Penalty rate goes up the later you are. We're 5 days late. Okay, so we're within this 1 to 60 days late, but we have to figure our penalty. So what you do is you take your total wages, not your taxable, but your total, 19,000 times 0.001, $19, or $35, whichever is greater. So we've got a $35 penalty. Now we add all of those together, so $896.43. If we had a previous amount due, we would enter that in there. Previous credit, so if we had overpaid or we have some sort of credit with the system, we can apply that to the amount that we owe. Total amount, add all those together, and then we're going to pay $896.43. So because we were 5 days late, now we've got an additional $36.43 that we have to pay. But that's how, and then signature, whoever is preparing the authorized signature of whoever is preparing the form, all of that gets entered in. If it's done electronically, that's not included in there. You just submit it, and then it takes you to another screen where it asks you, do you want to pay this? And then you set up your electronic payment and do that. There's also this part here where they are gathering market information. It has to be filled out. They want to know how many employees you had on the 12th day of each of these months. So how many employees did you pay? So if we were pretty consistent, everybody in all 3 months, we had 3 employees, each of those. If there was any bonus or additional amounts of monies that were paid, like did you pay out anything that was over and above just the regular wages? They want to know what that is. If the number of workers increased or decreased during the quarter, For any of the following reasons, check the boxes to indicate the reason. So if it was just, oh, hey, somebody quit one month and then we hired somebody new the next month, that's not really a reason. But if you had any of these reasons, a seasonal change, labor dispute, layoff, recall, anything like that, if it was a result of that, any of those, then you would indicate it. Again, they're just gathering data in order to see what the labor market looks like, collecting that data. So that is the Iowa Workforce Development Form. Let's see. Oh, it's pretty small. Any questions about that form? So when you go in, if you're filing the form, let's see. So employers, unemployment insurance, let's see, My Iowa UI. That's what for employers that are set up on the system, or if you're just setting up a new account on the system, this is where you would go. So existing users go here, they've set up the password and all of that. New users, you could go and create an ID and set up an account in that manner. I did this a lot for when I was working. I would set these accounts. If somebody had just opened a business, we would set up a sales tax account and a Department of Revenue withholding account, and a Iowa Workforce Development account if they had employees, as well as their federal ID number. All of that stuff is stuff that I would do for clients who are setting up new businesses. It's also something that businesses can do on their own. It's not rocket science, but a lot of times businesses don't want to do that, or they're afraid they're gonna mess it up, which if you're afraid you're gonna mess it up, you should probably hire a professional. So that's what the Iowa Workforce Development Form looks like. Any questions? All right. Let's move along here. So we've already looked at the fact that we've got these different, actually, I'll break this up.